Assalamu alaikum. This is lecture 42 of Advanced Cost and Management Accounting. We are discussing linear programming. Linear programming is a mathematical technique of trying to provide a solution for allocation of resources to products where the resources are scarce, they are limited. We have seen in the last session that there were an example of materials being in scarce quantities and labor being limited. So we formulated our model for the calculation of the optimum output. In other words, we are looking at and trying to find what is the best combination of products to produce when resources are limited. So we have two products, the Y and Z, and we want to produce that in quantities given our restrictions, our scarce resources. The scarce resources were materials, labor, and we also added a constraint for machine capacity. So we saw in our graph that we can identify a feasible area. So the graph identifies a feasible area. In other words, that area somewhere in there, the contribution can be maximized using a combination of the two products, the output of two products, the Y and the Z. We have drawn the constraints according to the equations that we formulated in our model, and the constraints were then plotted on the graph, and the graph identified the area of feasible area which is feasible. So now the next part is to try to find out within that feasible area which is the point that will give the maximum contribution, the point that will give maximization of the objective function. The objective was to maximize the contribution. So maximizing contribution, that part is now going to be covered in our current session. The feasible area which fits all constraints can be identified as we have done on the graph. The point must now be found within the feasible area where contribution C is the greatest. The maximum will occur at one of the corner points of this area. The shape of the area is somewhat irregular, so you have on two sides the boundaries given by the x-axis and the y-axis, and in between there is an area which is given by these different shaped lines where the lines are being cut and crossed. So now we are saying that in this area the point must be found where C is maximum, contribution is maximum, and it is going to be maximum at one of the corner points. So anything below the point is going to be less than optimum. It is going to provide you contribution which is not maximum, but it is going to be lower than maximum. So it has to be at the one of the end points. So, and it is going to be one of the points which is the outer point of this feasible area. The objective function C is equal to 14y plus 16z line is drawn by using a random value for C, say 2240. Now we are going to draw the line for our objective function. Objective is maximize C contribution. The contribution is going to be 14 for all Y and 16 for all Z. The sum of the two together is going to give us total contribution. Now we are going to draw a line, and so we are saying that we can draw this by using a random value. And the best random value to use, the one which gives us easy solution for plotting the line. We are going to plot this line now, 14y plus 16z, onto the same graph. So 14 multiplied by 16, this will give you that the solution is 2240, and this will be a multiple of both the 14 and the 16. So that's why a random number 2240 is used, which is actually 14 multiplied by 16. This is going to make the arithmetic easier, and 2240 will be divisible by both 14 as well as by 16. The objective function. Using the random contribution value 2240, which is 16 into 14, we are saying our objective function is 14y plus 16z is equal to 2240. Now we have given a random value to our objective function, and we said it has been arrived as the product of 16 and 14. So now our objective function becomes 14y plus 16z is equal to 2240. This is the function that is which we have to maximize and find out the point of y and z where this function is at a maximum. If y is equal to 0, z is equal to 140, and z is equal to 0, y is equal to 160. We can now draw this as a dashed line. Using the same procedure in our function of 14y plus 16z is equal to 2240. First, we place y as 0. When y is 0, then we find z is equal to 140. The next thing is to make z equal to 0. When z is 0, y is 160. So these are the points now on that graph that we plot. We can plot both these points, draw a dashed line to identify this as a separate function, as an objective function. So a dashed line is drawn, and this is going to give you the line which is the objective function. Each point on this line gives the values of y and z that give a contribution of 2240. So when we draw this line, this is any point on this line is going to give you a combination of a value of y and a value of z. And when you multiply them by the y by 14 and the z by 16, the answer will be 2240. That is going to be the contribution, 2240, anywhere along that line, objective function. So if we choose any one point and find out what is the value of z and what is the value of y, then for those values, the contribution is going to be 2240. The objective function is moved to the right until it touches the last corner of the feasible area. Now we said that the point at which the contribution is going to be maximum will lie on one of the corner points of the area identified as the feasible area. Which point? So we take the objective function and move it to the right as a parallel to the right, and continue to move it until it touches the last point of the feasible area. This means that if you move the line any more further to the right, it will go beyond the feasible area. So the point at which it touches the last point within the feasible area, that is a point which is going to be the optimal solution, which will give the maximum contribution. As we move the line upwards or right, the contribution starts to increase. All points on that line, the contribution will increase. And as long as we stay within the feasible area, we are going to consider that as a solution. So the higher we go, the higher is the contribution, and still within the feasible area. The point which is the extreme point which this line touches inside or on the feasible area, on the edge of the feasible area, that is going to give the optimal solution, the solution which provides the maximum contribution. Graphical illustration. The constraints are the same as we saw in the last session on materials and labor, and we also have the constraint of the production of Y, which is 420. So Y can't be more than 420 units. That's one constraint. The others are the labor and material constraints. You will see that the constraint of the machine capacity is very much outside the feasible area. This means that the machine capacity is not really a constraint. So given the other two constraints, the feasible areas given by the other two constraints, if we are going to stay within the materials and the labor constraint, then machine capacity will not be a constraint. That line 4y plus 6z is less than or equal to 2760. That line is outside of the feasible area, and therefore machine capacity can be considered as no constraint. Now the point within the feasible area has to be found. We have drawn the objective function of contribution is equal to 2240 as a dotted line. This dotted line is the contribution 14y plus 16z is equal to 2240. This dashed line is the contribution line. Now if we put, let's say, a scale on this line and then move the scale up as if we are moving the line up within the feasible area, then we can move it and we will find that the last point that it will touch is the point given by the arrow, shown by the arrow as a point C, which is the contribution. So that point is the last point that it will touch, and that point will represent the optimal solution. And if we check the values of y and the values of z at that point, they will give us the optimal solution. So the graphical illustration and the graphical solution, as we have just seen, is trying to examine our objective function, draw that as a straight line, as we saw, by taking the 2 points, where one point where y is equal to 0, that's going to be on the x-axis, and one point where z is going to be 0, and that is going to be on the y-axis. Those points are joined together, and to separate the objective function, this line is shown as a dashed line. This dashed line is then moved in parallel and moved to the right and moved up. As we move up, all the points on the line above are going to be a higher contribution. So we have to take it as far as we can and stay within the feasible area. So as we move it gradually, we find that the point C shown on the graph, that's the point which is going to be the last point that this line will touch, and that represents the solution, the optimal solution. At that point, whatever the value of y and z, that is the combination to use and combination to produce using your resources, using your constraints to maximize the contribution. Optimal solution. At this point, contribution C is maximum, and this is the solution. The optimal solution in the example indicates an output of 400 units of Y, contribution will be 5,600, and 60 units of Z, contribution 960, giving total contribution of 6,560. You can, from the graph, read the values of Y and Z at the point C. And we have been given in the solution that the value of Y is going to be 400 and the value of Z is going to be 60. So the solution within the constraints of producing Y and Z, where labor is limited, where materials are limited, and Y cannot be produced more than 420 units, there the best solution is to produce 400 units of Y and 60 units of Z. These are the values of Y and Z at the point C. Where the contribution per unit from Y is 14, so the total contribution from Y out of 400 units is going to be 5,600. And the contribution per unit of Z is 16, so from 60 units of Z, the contribution of Z, total contribution, will be 960. And the total contribution of both the products put together will be 6,560. So staying within the constraints, this point of Y400 and Z60 represents the optimal solution, the highest contribution that can be achieved. This is the use of linear programming. This is a graphical illustration of this technique, how by using the graph, the resources to be allocated can be identified, the products, how to ration between different products where you have two products. As we said, the graph can handle two products but not more than two products. So graph is two-dimensional, two axes, and therefore you can use the graph where you have two products and you want to ration the resources and find out how much to produce of each product. When you have a situation that goes beyond two products, where say you have three products or more than three products, 4, 5, 6, there the equation becomes more complex and the methods used, the mathematical methods used are more complex, and we don't need to go into the calculation of that higher mathematics, but just to give you an idea that this is an illustration that by giving the constraints their equation and finding out the feasible area, we can identify the maximization of the objective, which can either be to maximize the contribution or it can be to minimize the cost. Optimal solution, algebraic. The optimum output can be determined exactly by solving the simultaneous equations for the constraint that intersect at point C. 8y plus 4z is 3,440. 6y plus 8z is equal to 2,880. These are the two equations. In order to solve them simultaneously, you multiply the first equation by 2. If you multiply that by 2, you will get 16y plus 8z is equal to 6,880. And you subtract this from the previous equation and the result will be 10y is equal to 4,000. Because the 8z, they will cancel out and you will get 16y minus 6y, which is 10y, is equal to 4,000, giving you a value of y of 400. Substitute y in the above equation, so you get 16 multiplied by 400 plus 8z is equal to 6,880. Hence z is equal to 60. So you get the values of y and z by simultaneous equations. The very accurate method of getting to a solution, of course, is to use algebra, is to use simultaneous equations. The two equations that we had were of the two constraints, where you had material constraint and labor constraint. For those two equations, we formulated the equations 8y plus 4z is equal to 3,440 and 6y plus 8z is equal to 2,880. In order to solve them simultaneously, we need to bring one of them to the value of 0. And we can see that if we multiply the first equation by 2, the value of z will become 8, and that is also the value of z in the second equation. So once we bring the value of z to the same amount, then by subtracting one equation from the other, we are going to get z as 0. So 8z in both the equations, when you minus one equation from the other, z will be 0 and you can get a value for y. Once you obtain a value for y, then that value is substituted in the equation, and instead of using y, you insert the value of 400 and you can then arrive at the value of z. So the same solution, we obtain the value of y comes to 400 and the value of z comes to 60, and this is the solution given to us by algebra of this problem of allocating the scarce resource. Now, as we said, if the products were more than 2, then this equation would be y plus z plus another product, call it a. So y plus z plus a. So you would have 3 then variables in the equation. And if there were more than 3 products, then there would be more than 3 variables in the equation. And then we would be solving the equations for that many variables. Therefore, that's the complexity that we don't need to, the mathematics of that, we don't need to go into that now. But you need to understand the basis on which it is being done. Uses of linear programming. Calculation of relevant cost is essential for decision making. Let us now examine how practically we can use linear programming. The calculation, etc., seems to be mathematical and graphical, and so it seems theoretical. But what is the real use? And we have said that in decision making, the important or essential part is to identify relevant cost. We put information in front of us, and if that information contains information which is not relevant to our decision, then it is going to confuse the issue, it is going to confuse the decision. In order to arrive at the best decision, you need to just bring in front of you the relevant costs. We've talked about relevant costs earlier, and earlier we said that one type of relevant cost was the variable cost for making certain type of decisions. So over here we are going to see how the relevant cost can be identified by use of linear programming. Relevant cost decisions have to be based on information. Information has to be relevant. So identifying the relevant cost is essential for decision making. When a resource is scarce, alternative uses exist that provide a contribution. An opportunity cost is therefore incurred whenever the resource is used. In situations of scarce resource, and we discussed this earlier, scarce resource means the resource will not be sufficient to meet the requirement. So if you are going to use that resource in one product, it means that you can't use it in the other product. So there is a sacrifice. Sacrifice, there is an opportunity lost or an opportunity cost. So opportunity cost is the using of resource in one product and not being able to use it in the other product. In our example, where we had material restriction, so if we are going to use material to make product Y, then that material is not available to make product Z. And therefore, there is an opportunity lost by not producing Z when you produce Y. And that is also the opportunity cost of producing Y. So we are going to examine how opportunity cost should be viewed and looked at. An opportunity cost, therefore, is incurred whenever a scarce resource is used. Every time a scarce resource is used, we are using it for one product, we are not going to be able to produce the other with that resource. So there is an opportunity cost tied to all scarce resources. The relevant cost for the scarce resource is calculated as acquisition cost of resource plus opportunity cost. So when we look at the relevant cost of that resource, for decision making, we have said we are going to look at relevant cost. The relevant cost of looking at a scarce resource is not just the purchase price. It is going to be the acquisition cost plus the opportunity cost. That is the relevant cost. So we are identifying an important point, an important aspect now for decision making, that although a resource has an acquisition cost, let's say in our example labor cost 10 rupees per hour. Now if labor has a value of rupees 10 per hour, that is not the relevant cost for making decisions if labor is scarce. The relevant cost is going to include the opportunity cost. So hence, the relevant cost is going to comprise two things: the acquisition cost plus the opportunity cost. We must first of all establish what is the acquisition cost, and then we need to establish what is the opportunity cost, and the sum of the two will represent the relevant cost. Calculating relevant cost. When more than one scarce resource exists, opportunity cost should be established using linear programming techniques. This is going back to what we have just discussed and seen the example of, that when more than one scarce resource exists, then how to find the opportunity cost? The opportunity cost should be established using linear programming techniques. In other words, we are going to use linear programming to see what is the maximum contribution by allocating the resources to the different products, and in identifying the combination that gives the maximum contribution. So that maximum contribution then should be divided by the number of units or number of hours to arrive at the contribution per hour. So now we are calculating the contribution by using linear programming, and also calculating the contribution per unit of resource. Whatever is the contribution divided by the number of units. So now we have calculated the contribution per unit of the scarce resource using linear programming techniques. Linear programming is going to identify the best combination when there is more than one scarce resource, best combination of products to use in giving the highest contribution. In the example of ZB company, the relevant costs of resources used are materials 4.4, acquisition is 4, and 0.4 is the opportunity cost. Labor 11.8, acquisition cost is 10, plus 1.8 is the opportunity cost. And variable overheads 1, acquisition cost is 1, and 0 opportunity cost. So let's look at these three variables, these three items, these three constraints. Materials. What is the relevant cost for materials? We know the acquisition of material was 4. The rate of unit of material was 4. But there is an opportunity cost, and that's calculated by looking at the contribution and dividing that by the number of units being consumed. So that comes to 0.4. So therefore, the relevant cost of material in our example of the ZB company is 4.4. Similarly, we have calculated the contribution per unit of labor as 1.80. So where the cost is 10, there the relevant cost is going to be 11.8, which is 10 plus 1.8, the cost plus the opportunity cost. That gives you the per unit cost, which is considered as the relevant cost for labor in this example. So the labor is 11.8. Variable overheads have a rate of 1, and we have said there is zero opportunity cost. Zero opportunity cost because variable overheads have been assumed to be based on machine hours. And machine hours and machine capacity, we said, was not a constraint in our production. So if machine hours are not a constraint, then there is no opportunity cost. Opportunity cost, therefore, we are saying opportunity cost will relate to those resources which are scarce. So variable overheads, rate of 1, no opportunity cost. Fixed overheads, relevant cost nil. They do not vary in the short run. And for our decision making, we are saying that fixed overheads have opportunity cost of nil. Opportunity cost of nil or relevant cost is nil because in our decision making, the fixed costs will remain fixed. Whether we increase the production of one or reduce the production of the other, the fixed cost will remain fixed, and therefore that is not regarded as relevant. So this is the way in which we have calculated relevant cost for material as 4.4, labor as 11.8, variable overheads as 1 with no opportunity cost because it relates to machines, and fixed overheads as relevant cost as nil because it does not vary with the changes in production. Variable overheads are assumed to vary with machine hours, which are not scarce, hence zero opportunity cost. So this is how we have concluded the variable overheads argument or perspective and position, that variable overheads in this example do not have an opportunity cost because they vary with machine hours and they are dependent on or based on machine hours. There is no capacity constraint on machine hours, and therefore variable overheads will just have the acquisition cost and will not have any opportunity cost. Selling different products. Assume the company is contemplating selling a modified version of product Y called product L in a new market. The market price of L is rupees 160, and the product requires 10 units of each resource: labor, material, and overheads. Should the product L be manufactured? We are now going to examine the practical aspect of finding out relevant cost, having based the relevant cost on contribution calculated through linear programming. Now we'll look at a hypothetical example, extending our example that we have looked at so far. And we are going to say that should a decision be made to produce this product L or not. Product L has a selling price of 160. It is going to consume 10 units of labor and material. Therefore, should it be produced or not? We said for decision making, we are going to examine relevant costs. Relevant costs are essential, and decisions should be based on relevant cost. So here we need to make a decision on whether or not we should manufacture and sell product L. Product L can only be made by restricting output of Y and Z because of input constraints. The production of product L in our example is going to require material, and it is going to require labor, and of course it is going to require overheads. We are in a situation where material is restricted, there is a constraint, it is scarce, and labor is scarce. So where labor and material are scarce, and these are going to be used in product L, this means whenever we produce product L, we will not be able to produce the related amount of products Y and Z. So Y and Z will need to be sacrificed. They will need to be left, and production needs to be lost. So an opportunity cost has to be incorporated for producing L. Let us see what happens when we incorporate opportunity cost in the production of product L. We need to know the opportunity cost of releasing the scarce resources. The scarce resources are the material, labor, and overhead. We need to know the opportunity cost, and therefore we need to know the relevant cost. Now the relevant information is shown on the slide. Selling price is 160. Materials are 10 per unit, and the relevant cost per unit was 4.4 we just discussed. So the material cost per unit of L is 44. Labor, we said, has a opportunity cost plus its own acquisition cost amounting to 11.8. So the relevant cost of labor is 11.8. 10 units of labor will be used. The labor cost per unit is going to be 118. Variable cost, only acquisition cost, no opportunity cost. Rate was 1. 10 units will be used. So the per unit variable overhead cost will be 10. This gives the total variable cost of 172, and the contribution based on the selling price of 160 is minus 12. The contribution is reduced by 12 for each unit of L produced. So this example illustrates how decisions should be made and what relevant information should be examined. The selling price of 160 for product L, compare that to the relevant cost of material, labor, and overhead. And by looking at the relevant cost of material, labor, and overhead, we find the total variable cost comes to 172 compared to the selling price of 160. So the company would lose 12 rupees for every unit of L produced. This is the basis on which the decisions should be made. This is the relevant information, and this is how the decisions made need to be examined, because if they are not, and the company goes ahead and does not look at the opportunity cost and only looks at the acquisition cost, it might make the wrong decision, because you are going to lose production of Y and Z whenever you produce L. So therefore, the contribution per unit from Y and Z should be incorporated in the cost for producing L. Maximum payment for additional scarce resource. Opportunity cost provides important information where a company can obtain additional resource only at a premium. Now let us look at further extension and further application of our opportunity cost principle, of our relevant cost principle, and therefore the application of our linear programming. Don't forget, we have used linear programming in identifying the relevant cost. So we are now going to look at what should be the maximum amount that a company should be prepared for a scarce resource. What we are saying is that labor is a scarce resource, but it might be possible to remove this restriction to a certain extent by paying overtime. So then that restriction can be used, but how much overtime can the company pay and still retain a positive contribution? That's the question in this case. And same for material. That material, we said, is limited and the price is 4, but it might be possible to increase the price and then increase the quantity of material. So how much more should the company pay and still have a positive contribution and add to the material quantities. This is what we have to examine. How much should the company be prepared to pay? For example, the company may be able to remove the labor constraint by paying overtime. So this is what we are examining, that in removing the constraints and adding to the resources, the company has to pay an extra amount, and we have to arrive at how much should the company pay. We know that the cost of material is 4 per unit and the cost of labor is 10 per unit. So how much more can be paid while still retaining a positive contribution? Maximum payment. Opportunity cost margin indicates that the company can pay up to an additional 1.8 above the standard wage rate and still obtain a contribution from the use of labor. The opportunity cost that we calculated for labor was 1.8. That was based on the contribution per unit of labor and using the contribution calculated through linear programming techniques. This means that 1.8 is the cost, opportunity cost. In other words, if the labor is used elsewhere, the contribution lost will be 1.8. Or in other words, the labor is per hour contributing 1.8, adding to the contribution. So if we are going to increase the price of labor, we will reduce our contribution. And if we add 1 rupee per hour in our labor cost, we are going to lose the contribution. So how much can we increase and not lose contribution and go into a loss-making situation? Because the contribution from labor is 1.8, that means we can reduce our contribution by 1.8 by increasing the labor cost of 1.8 and still end up with a no contribution and therefore no loss situation. So the maximum that price of labor can be increased is from 10 to 11.8, and you still have a zero contribution. That means anything below 11.8 is still going to make some contribution. So when you increase labor and you increase it up to 11.8, anything below 11.8 will still be giving you a positive contribution. So that is the extent to which the labor cost can be incurred. This is the application, therefore, of our relevant cost and linear programming techniques. The total contribution will be improved by an additional payment below 1.8 per hour. So as long as the payment made and the cost is below 1.8, the additional cost is below 1.8, the total contribution will increase. Labor will be making some kind of a contribution. Similarly, ZB company will improve total contribution by paying up to 0.4 in excess of the standard material cost for units obtained in excess of the 3,440 units. The constraint was 3,440 units. And we are saying that that is the amount of material that is going to be used. If we go beyond 3,440 units, and if we have to pay more, then just as we calculated for labor, the contribution per unit from material is 0.4. Therefore, the material cost can go up to 4.4. Anything below the cost of 4.4 is going to add to total contribution, bearing in mind that this cost should only incur after 3,440 units have been acquired. After purchasing 3,440 units, additional units of material can be acquired as long as the cost per unit remains below 4.4. Below 4.4, the total contribution for ZB and company will increase. Hence, the company will increase short-term profits by paying up to 11.8 for each additional labor hour in excess of 2,880 hours and up to 4.4 for each unit of material in excess of 3,440 units. The constraint that we examined for labor was 2,880 hours. So any amount of labor increased beyond that, where the cost is less than 11.8, is going to increase contribution. And the total constraint for material was 3,440 units. Beyond that, whatever units are acquired, if the cost is below 4.4 per unit, the total contribution is going to increase, and that will be beneficial for the organization. So that is how the decision making is helped by use of relevant cost and by use of the linear programming technique. Control. Opportunity costs are important for cost control. For example, material wastage is reflected in adverse material usage variance. The responsibility center should be identified not only with the acquisition cost of rupees 4 per unit, but also with the opportunity cost of rupees 0.4 for the loss of one scarce unit of material. In controlling material, we allocate the cost of wastages to the department or to the manager that is responsible. When you are allocating the cost of scarce material, then it should include the opportunity cost of 0.4. So the cost of material wasted, in this case of ZB company, should be allocated at the rate of 4.4 per unit, not 4 per unit, because of the lost opportunity when you waste a scarce material. The process highlights the true cost of inefficient usage of scarce resources and encourages responsibility heads to focus special attention on the control of scarce resources. By making the allocation of acquisition cost plus opportunity cost, those heads responsible for the usage of these resources are going to focus more attention. They will be more careful because they will be wasting the resource which is scarce, and the value of that resource that will be charged to their account will be not just the acquisition cost but also the opportunity cost. That is going to help them focus attention and try to control the wastage of these scarce resources better. That's all for this session. Thank you for listening.